Good weekend, traders. We are at a true moment of truth here in the markets here, and very critical point to figure out here. So basically, what we got going on here, where we closed Friday, we came down. We're doing a back test where we back test before we launched for the all-time high here on SPY. So basically, where we're at right now, if we launch off right here, we might be setting up for a true double top scenario in the S&Ps. Okay, if they manage to hold this and rally it from here. So very, very critical inflection point where we're at right here, right now in the markets. We're coming into tomorrow. Initially, the futures look like we're up this morning. So definitely keep that in the back, mindful in the back of your mind, what's going on here in the markets, and try to trade accordingly on that. Okay, IV has expanded considerably this week on the options, so premiums are up versus last week, considering the sell-off we had last week. Um, and we're getting awful close to going into backwardation on our VX futures as of into last week. So, but we haven't done it yet, but we're getting closer to doing that. And we also want to point out this skew actually ticked up. That's the number of out of the money calls and puts. So there was more out of money activity hitting Friday in a down market. So a lot more bigger bets are being placed outside for a bigger move. So not only are the volatility expanding, they are causing part of that volatility expansion is they're making bigger bets that of bigger moves in the markets. So we'll see what happens here in the markets going forward. Okay. So basically, honestly, what I'm looking at here, if we break down, if I zoom in here real quick, I think we have a cluster of untested value down here in the $400 range into a very critical trend support area. Our primary trend is way down here around the 380 area here on SPY, but I do try to always look for these clusters of untested value uh, for price to migrate back towards. Okay, and as a general rule of thumb, so this area right up here, most of this has been repaired. The past couple of weeks we have had some sell side action, and we're coming down. But up until that point, uh, this move right here repaired a lot of this. Okay, so we repaired a lot of the uh, price action, bad price action performance, and now we're coming down again. Uh, so like I said, very critical area here, you know, to see if we can hold and bounce off of back to all-time highs here in the market. But like ideally though, coming back into this uh, these untested volume points to control, these tend to be lower volume nodes. So if you look around the $400 range, and if I go back and on the weekly here, I'm not going to be able to do everything I was wanting to do with this. Put my market webs in a volume profile right around the 400 area. Okay, so this back in 2020, uh, back in 2021, we just blew right through this. Okay, so this is definitely a delineation mark between the bulls and the bears losing this area. You can tell it basically back from the 2021 area. Okay, so this 413 area should be a very critical supporting area going forward, and that's something we got to think about uh, in this market. And so we built out value so far this year in that zone as well. So, the buyers and sellers were really in a lot of turmoil to decide whether they want to take prices higher or take prices lower. So this is your critical support area for a back test potential. All we may need is just to come back down, back test it, and then continue higher. But that's something that I'm definitely keeping on an eye on going forward here in the markets. Okay. Now, the problem in the markets are the cues. If we have problems in the market, the cues are the problem. So basically, what we've got going on here, this is the primary uptrend that we've had since the COVID, okay, or yeah, the COVID scenario, okay. So I just mirrored the slope of that channel, and so basically, what the cues did, they came up super fast, and we exceeded the trend. So we had a hyper trend, that blow off trend here in potentially blow off trend in tech, and now we are got a full weekly candle back inside of that weekly uh, blow off top trend. This suggests this pattern that this will at some point in time come back down and test the bottom of this trend line. It can go completely sideways for weeks, you know, or it can retrace in price. I don't know which way it's going to be. We have a lower high, okay. We are currently, just like the S&Ps, holding critical support. Okay, so and we have a trend line right here. Go down on the daily time frame. Okay, we have a trend line right here that we actually breached on the close Friday. But initially here we are trying to pop the markets and hold this higher distribution area. Okay, so bottom line is, until we get a closing price here, basically 357.50, closing price below that, you know, the uh, the uptrend is still valid. We're in this higher distribution zone in the markets. Okay, so it's not the end of the world yet, but we are flirting with trouble. Okay, definitely flirting with trouble. Now, if I want to go back on the weekly, the issue that I do have with the markets, back to the weekly real quick, and I'll put the market webs on there. If we start losing this level, the problem is we don't have much historical uh, volume. We just completely rocket shipped up. So if we start losing this level, it can be an absolute shit show to the downside. So be mindful of that. I mean, we don't have much value. And, you see how we just have this complete and total two volume distributions for the yearly on the NASDAQ? Typically what you're looking for is some sort of a bell curve bailout, on its side. If you're using volume profile, it's a bell curve on its side. Okay. So the problem that I'm seeing in this market, this was the high volume point of control back in 2020. This was or 2021. This is the high volume point of control down last year. Okay. Both of these are considerably lower, down into this range down here. Okay. Down in this. So this really looks like a very toppy situation that we've got going on here in the hues. So you got to be quite mindful of that scenario, and it's quite could potentially be quite dangerous for the markets. Okay, go back to the link here. IWM, starting on the weekly here. This is our long-term, decade-long trend for the IWM. So it's acting weaker than the other two. The other two are trading above their trend still. This thing here is in its trend, pushing, trying to test the lower end of a decade-long trend. So be mindful of that going forward in your trading. Okay. Um, if you go out here 10 years, if I can find it. 10 year there. That's not quarter. I don't want quarter. I want monthly. There he goes. And see, you can go out 10 years here and you see what's going on the cues. We're coming down pretty hard into the bottom of that trend. We haven't breached a primary trend. We're in a primary uptrend. So it's the bear case, is getting closer, but we're not quite there yet. So just definitely keep that on watch in your trading going forward here. Diamonds hanging out pretty good here. See, the diamonds, we're still up here in the upper distribution. Very strong upper distribution. Lower high, just like we saw before. with the other things. So we'll go down here on a weekly, and as you can see, we breached. We've had the first weekly candle breach of this accelerated uptrend. Okay, that's pretty much all I'm seeing here. We haven't broken out. Once we lose 337, you've really got to start getting at your bear. Start looking for the bearish hard test of the lower end of the trend line. So we have gaps below us, and we have untested virgin point of controls below us too. Uh, that typically need to be satisfied. So keep that very mindful going forward here. And another thing, when you're at an all-time high, and when you see a cluster of untested uh, uh, volume point of controls, be on and different time frames, okay, that's another little warning sign that buyers are shut off. So and that's kind of what we got going on here with the diamonds. So definitely keep that on mind. Um, when you get to highs and when you start having clusters of rejection, that shows a strong liquidation. Okay, so definitely be mindful of that going forward here. Okay, so now I'm going to see how much time did I have on my video here. Give me a second here. So, in my opinion, the most important chart in the markets is Apple. We have all kinds. It just had this massive rally this year, and we have all kinds of structural repair that could happen uh, with this beast. So, be quite mindful of this scenario that Apple could be setting up for coming right back down into this trading channel. So, we may have just potentially put a head in and we're potentially into this. So we have Apple with the iPhone launch. We got some excitement about the new phone launch and stuff. But in France, all of the Apple stores in France are shut down because they're on a strike. As soon as they launched that Apple, they up and went on strike. So Apple would, force them into giving them more money and stuff. So definitely keep this on watch. This one here is troublesome. Going, yeah, so definitely we got to be very mindful of the situation here developing here with Apple. So we are into the highest point volume point of control for this year right here, right now on Apple. If we start pushing lower, then that puts us in the bearish side of this year's trend. So be very mindful on that one. Microsoft, uh, very bullish pattern into a double topping situation. We did lose the primary uptrend last week, coming down into critical support. So what we want to do, if we start losing last week's low, then this starts, this one here, uh, starts looking like it's going to have a much greater correction, potentially all the way back down into the 290 area. So we want to keep this one on watch, as a possible double topping scenario. Like this had a double top. We found support down here. That could be very well what we're doing, coming back down into the 280 area on Microsoft here in the not so distant future. NVIDIA is looking pretty bad. Let me start with SMH on that. SMH is looking pretty bad here. Broke the primary uptrend on SMH. Very wide trading range on this. And this is one of the big problems we got going on in this market. We got this massive gap caused by NVIDIA in our semiconductors. So this is a very, just we basically have an island top going on here with a double topping formation. Very dangerous situation here in the markets if this continues to fall in the markets. So be very mindful of that. That's why I went over the NVIDIA. That's what caused all that problem. NVIDIA, massive gap down here on NVIDIA. Uh, so it looks to me, we're in a higher distribution on NVIDIA. It looks to me NVIDIA is going to be coming back down, retesting the 2023 support. I'd much rather be leaning to the downside around 400 than be pushing the upside, in my opinion, on NVIDIA. We do have earnings coming out. Well, that's way back in. Yeah, we got plenty of time in that. That's November. Okay. Other ones, Microsoft, Amazon's looking pretty bad. Okay, Amazon's looking pretty bad here. 2-year resistance has failed on that with a very strong rejection candle last week on Amazon. Looks like this week we'll probably be coming back down into the 125 area. If we lose 125, then it could get ugly pretty quick. So that is 2-year critical supports right here around the 126, 125 area on Amazon. Google. Google looking really bad. Well, not looking too bad, but a really bad candle last week. Uh, uh, that's a that's really 3-year critical resistance, not critical support. Okay, and then this has acted as 2-year support down here around the 126 area. Has been acting as some sort of 2-year support with a gap below that. Um, so far this year, uh, our most of our volume has occurred below the current. The gap was right above most of that volume. So this is a high odds scenario with that gap being where it's located versus the high volume of the year. This is a high odds scenario. We're going to be coming back down into the 121 area, in my opinion. Tesla. Uh, Tesla, really ugly rejection candle last week. um, Still managed to hold the upper distribution on the close. Uh, so the looks like it's coming back into this trading range, in my opinion. So I'd be looking on the downside at the 210 area, possibly as low as 210 on the downside. Okay, um, it doesn't have to go that far, but considering what we've seen in the past, it could have potentially all the way back down to the 210 area, in my opinion. First, you got to break this trend line. We haven't even broke that yet. If you go back down on the daily, zoom in here real quick. Bunch of untested stuff that needs to be worked out here. First of all, we have to get into the high volume node. This here is primarily where the buyers and sellers showed up to fight over price, and that is actually lining up with our trend line right here and an untested volume point of control. So that puts us right down to the 230 area. So 230 may not be too far down the road here on Tesla, based on the pattern that we're currently seeing to be playing out here. Okay. Some other things I'm looking for as leading indicators here. This is our SLX index. This is our steel index. It tends to be a leading indicator for the housing industry and the industrials industry. And I do want to point out, last week we did close right into that channel low trend line. So I want to keep this one on watch. We've been trending sideways for some time now. So I want to watch this for a potential breakdown here because we have a whole nother slew of problems with the home builders in China. Looking like a bunch of those are going to just go belly up. So that's the news in so far, and that's that is part of the reason that it's given some downside pressure here on our steel industry. But we have the strikes going on in the auto industry and the higher interest rates happening in the markets. So definitely keep this on watch going forward here on the steel industry going on here. And then if you look at NG, not natural gas, HG. If you look at HG as well, see this wedge formation we got going on here on our copper. That is also a leading indicator of health in the industrial sector. So I want to definitely keep this one on watch. It looks all kinds of gaps below us here. It wouldn't take a lot, just some bad economic data this week, and we could see a collapse in the copper futures this week. So definitely keep this on watch. Potential collapse in copper futures with the data coming out this week. Okay. I also want to point out our ZNs, our bond yields are going higher once again. So we are hitting year highs once again this morning here on bond yields. Uh, like I've said many times, I think we're going to 6% on the, uh, you know, at least shorter. JP Morgan said, Jamie Dimon said the 10-year was going to 6%. So we're still quite a ways away from that. So definitely keep this on watch. Things on the news this week: we got Costco earnings tomorrow or today. Later today, Costco is going to be coming out, or this morning. Micron's going to be reporting this week. Nike is going to be reporting. CarMax. That's some of the things hitting the tape this morning. Uh, None of the major players are given any dividends to speak of. You do have Philip Morris, which is a big dividend payer. Typically, the high dividend players, they get hit in a interest rate hike cycle from the Fed. So be mindful of that. They tend to be inversely correlated in a higher interest rate environment. Okay. Some other things that I got going on here. We do have home price index coming out today. Case-Shiller home price, consumer confidence numbers are coming out, new home sales. So we get a lot of home data hitting the tape and record high interest rate environment today. Um, we got mortgage application data hitting tomorrow. Is that tomorrow? I can't remember. Yeah, Wednesday. Okay. So tomorrow we got mortgage, and then we have durable goods orders. So this is like autos and Caterpillar, and that's why I'm saying, that's why I was looking at that steel industry. The steel stocks look like they're ready to break down. We've already been told Nucor is already laying off people. Okay, I think the steel stocks are ready to break this week. Uh, and durable goods, ex transportation. Oh, I forgot to mention the transports on my charts. Okay, and then we also have economic data, third estimate. Initial jobless claims there Wednesday, and continuing claims and pending home sales all hitting Thursday. And then finish things off real quick here, IYT. That was another thing I was looking at here. And if you go, it doesn't look like a really bad chart pattern right here, but if you go out on a weekly, and if you add the volume profile, I want to show you guys something that I noticed that really stood out like a sore thumb to me. Look what's happened here. So back in 2021, we came up in here and we just hung out here most of the year. 2022, the first part of the year for up to April, May, we stayed up in that area and we rejected all that. This year, we tried to come back up in here, but we never got volume supporting the price. You see how the volume just dropped off the cliff on these transports? And this had a lot to do with the ever increasing price in crude oil. This is a major red flag. This is one of your major leading indicators in the markets when you see the transports doing something like this. So definitely keep that in on your watch going forward here. Okay. So I'll see you in the trading rooms, and like I said, our group's all free. If anybody wants to be in, just DM me either on Twitter or on uh, in the trading rooms. Just let me know if you guys want to get into the Zoom rooms each day. Thanks a lot.